we are tracking a day of high-impact structural economic shifts alongside the successful stabilization of severe regional emergencies across the United States. On the macro level, the U.S. government has lost its final perfect credit rating, while surging power demands from artificial intelligence have triggered a massive consolidation in the energy sector. Locally, North America's largest commuter rail network is back online. A violent shooting spree in Austin has ended with arrests, and emergency crews are currently battling a fast-moving wildfire in Southern California. While immediate physical threats to citizens are being neutralized, the long-term economic landscape is becoming significantly more expensive and consolidated for the average consumer. For the first time in 108 years, the United States no longer holds a perfect credit rating from Moody's. The financial institution has officially downgraded U.S. sovereign debt to AA1. The agency cited Washington's persistent fiscal gridlock and a continued inability to manage growing federal deficits as the primary drivers of the downgrade. This chart shows projected federal debt climbing to 134% of the country's gross domestic product by 2035. By that same year, interest payments alone will consume 30 cents of every tax dollar the federal government collects. A lower national credit rating translates directly to tighter consumer wallets. Expect higher borrowing costs on home mortgages, new auto loans, and credit cards, as the increased cost to service U.S. debt ripples through the economy. In the energy sector, NextEra has announced plans to acquire Dominion Energy. If approved, this merger creates the single largest electricity producer in America. The primary driver behind this acquisition is the massive increase in power consumption required to run artificial intelligence data centers, which operate around the clock and place heavy strain on the physical grid. Regulators will face intense pressure to scrutinize the deal. Reduced competition typically leads to monopolized pricing, bringing higher monthly bills to households. The physical infrastructure required to support artificial intelligence carries a steep price tag, and it is rapidly forcing major consolidation across the U.S. energy grid. Regionally, a final wage agreement has ended the 3-day Long Island Railroad strike, restoring service for 300,000 daily commuters. In Texas, the immediate physical threat to the Austin community has been neutralized. Police have arrested 3 juveniles connected to a spree of 12 random shootings across the city. Meanwhile, the Sandy Fire in Southern California remains active. The fast-moving brush fire has scorched over 184 acres and forced evacuations in parts of Simi Valley and Thousand Oaks. While transit and security crises have stabilized on the East Coast and in Texas, this active environmental threat in California remains a significant risk factor for local supply chains. Physical security in Texas and transit operations in New York are successfully restored, but the national economic baseline is shifting to a higher cost environment. Factor higher borrowing costs into your immediate financial planning. Additionally, monitor utility rate hearings closely as the NextEra and Dominion merger moves through regulatory approval. Maintaining resilience requires tracking these immediate regional events while adapting to the structural fiscal shifts that ultimately dictate your daily expenses.